everyone's doing well. This is our crypto education segment, and we'll be covering a really interesting topic here. If you go to our Discord, as it is, I'm sharing my screen right now. You will see that we have a education section here, and we've been covering this through the last few weeks, and we're gonna continuing like reading through a few of these sorts of literatures because I think it's important for people to understand what is cryptocurrency, what is blockchain, what is Bitcoin, what is Ethereum, what are altcoins. Today we're going to learn about decentralized finance, the sort of layers that connect the whole scenario together, from dexes to DAOs to games to metaverse plays. They're all connected within DeFi. So yeah, if you want to basically go to our Discord, just here at the Cryptoverse guide, you will find all these sorts of educational bits, and we cover not just education, but we cover trading guides. So you learn about pip count, and you learn about candlesticks and divergence, and if you want to challenge yourself in Solidity, we've got some intros to Solidity, and you can learn some programming and build these DeFi tokens. But today we're going to be covering what is DeFi. Also, we have a Medium page where we basically put all these articles together. So if you go to our CryptoCobra's Medium page, you'll find that we define things and sort of post all our, you can say, conclusions onto these little blogs. But today, I'm going to start off with just defining DeFi, and then we can start to build and find examples of this, because I think this is really interesting. So DeFi, in other words, decentralized finance, is a movement that aims at making a new financial system that is open to everyone and doesn't require trusting intermediaries like banks. To achieve that, DeFi relies heavily on cryptography, blockchain, and smart contracts. So what you have here is basically when you are making a transaction through your banks, there's all these sorts of protocols that the bank has to go through to basically verify that transaction. And what that does is it slows the speed down a little bit. Sometimes you'll see you're doing a Forex transaction and it takes a few hours, sometimes a day if you're in a developing world country. But something like DeFi sort of improves that process, and gets rid of all the intermediaries. So yeah, smart contracts are the things that are swapped in between them. So smart contracts are the main building blocks of DeFi. If you don't know what smart contracts are, or you want to refresh your knowledge, you can check out my previous blog post. Cool. Smart contracts, if you go to CoinGecko and look into all these different tokens, all these tokens here are basically smart contracts. And then off their smart contracts, like mainnets like Ethereum, you build on from there into tokens and into all these sorts of like variables. But all of these tokens here, you see some of them are stable, some of them are borrowing lending, some of them are Oracle type of tokens, and some of them are working on layer 2, but they're all sort of smart contracts. So let's define smart contracts a little bit. So it's worth noting that currently most of it is not, pretty much all of DeFi projects are built on Ethereum. Yeah, so there's projects up till now that are starting to build on Solana, on BNB chain, on Polygon layer 2 in fact. So the main reason for this is the Ethereum layer, a fairly robust programming language called Solidity that allows for writing advanced smart contracts that can contain all the necessary logic for the DeFi applications. So within the smart contract, you write the rules. You write how many tokens are in like circulating supply, how the unlocks work, and you basically program the smart contracts to basically use these utilities like stakings, like all these different mechanisms. But besides that, Ethereum has the most developed ecosystem across all smart contract platforms, with thousands of developers building new applications every day, and the most value locked in smart contracts, which create an additional network effect. In fact, all of DeFi protocols mentioned in this article are built on Ethereum. So we're going to go through a few different examples because I think it's important to understand where the main nets get built, and understanding the history of it, and realizing it's only been like lesser than 5 to 6 years of this development. So we're all new to this. sort of robust DeFi exchange, and it's going through its sort of iterations. So the first sort of DeFi protocol that was founded on Ethereum on ERC20 was MakerDAO, right? So MakerDAO was founded in 2015. It allowed you to do things that banks allowed you to do, like borrowing and lending, but at a faster pace, at a much more convenient way. So MakerDAO allows users to lock in collateral such ETH and generate DAI. So DAI was its stablecoin, a stablecoin that can by using certain incentives follow the price of US dollar. DAI can also be used for saving on Maker's Oasis platform. So this is how we started off DeFi. We started off lending and borrowing. So lending and borrowing is the only one part of this ecosystem. Some of the other important parts are stablecoins, decentralized exchanges, derivatives, margin trading, insurance. So these are all different use cases within DeFi. We started off with borrowing and lending. So we have things like MakerDAO. Right, we can check them out. So if you look into their ecosystem, you'll see what they're working on: governance, DAI, ways to use it, stablecoin, gaming, integrations like Coinbase, Panda Exchange, Wire. So these DeFi projects have huge use cases. So borrowing and lending is what it started off with, and there's actually like quite a few cool borrowing and lending protocols on thing. My favorite is Compound Finance. Check out Compound Finance. You basically can stake your tokens here and earn a good return. So it's something to really look into. So let's continue. So this is borrowing lending. So this is a little chart, a little graph that tells you its different use cases. So stable coins are one, pegged against the dollar, burn rate, lending and borrowing, insurance. So like if we look into insurance, there's projects like Bridge Mutual that basically allow you to insure your wallet. So you can connect your wallet here in a non-KYC basis, launch version 2, and basically insure your tokens. It's pretty cool. So that covers insurance. So DeFi has all these different things: borrowing, lending, stables. Margin trading is another one. Things like DYDX. So let's look into the differences between DeFi and CeFi, right? So CeFi is centralized finance. Things like, you can say Binance, things like IC Markets, all these different brokers we use, they all are basically working through permissions. They're a closed set of databases. They can be censored. If folks don't like your activity, they can close and stop you from transacting on their protocol. And it's pretty expensive. The sort of, you can say, margin fees and all these sort of like commissions that get put into it also adds into your sort of like 5 to 10% of your profits go into these sort of costs. So, and they're built on old foundations. They're built on databases that don't, you can say, talk to one another. They don't communicate. They don't like work in optimum fashion the way DeFi does. So that's centralized finance. DeFi, on the other hand, is permissionless, right? It's open to the world. There's no KYC to go through. It's censorship resistant. You can't stop the transactions. You can't stop the protocol from allowing you to connect your wallet and swap tokens. And in fact, it's cheaper. And it's built on the blockchain. Everything that you see on DeFi gets moved onto things like Etherscan, right, for Ethereum. So you can go to Block Explorer and you can look through the latest transactions. You can honestly look into your own sort of wallets and transactions and be able to explore and see that transparency there. So yeah, so lending, borrowing is one of the use cases we kind of covered here. Algorithmic stablecoins is another thing that we can kind of look into, as this has been in the topics. Stablecoins have been in the topics for the past couple of weeks in DeFi. So with clever use of smart contracts and certain incentives, we can create a stablecoin that is pegged to the US dollar without having to store dollars in the real world. We already mentioned MakerDAO, that essentially allows the users to lock in their collateral and generate DAI. DAI is a good example of an algorithmic stablecoin. So stablecoins, they peg against the dollar, and it's a more safe way of keeping your sort of like pegged stables, and not have to play through the inflationary aspects of Ethereum and Bitcoin and all these different altcoins, right? You can use the stable coin and it always pegs against the dollar. And there's other sort of stable coins such as USDT, right? Tether, USDC under the Circle Foundation, and PAX. These are all the different things. So we're currently going through iterations, guys. Like we only just started building these sort of you can say echelons and data structures. So it's gonna take a bit of iteration. So let's read the issues here. So the main problem with them is the fact that they're centralized, as there is a company behind them that is responsible for holding the equivalent of the value of stablecoin in USD. Nevertheless, these stablecoins gained a lot of popularity and are extensively used in DeFi applications like Compound and Aave. Aave is another really cool DeFi project that you can use for lending, for borrowing, and you can use it for many different use cases. They're open source liquidity pools, so you can use these to basically borrow and lend, and you can also stake your stables and start to earn things like Polygon, like Arbitrum, and earn a good percentage. So yeah, Aave is another big project. The other thing I think most of you are in most recognition of is a DEX, right? So a DEX is a decentralized exchange like Uniswap, right? So something like Uniswap connects to your wallet, and you're able to trade these stable coins, trade all sorts of things. Connects to your wallet, and then once you connect it to your wallet, you can like sort of swap tokens. So that's a decentralized exchange. So let's kind of read a little bit about it. So decentralized exchanges, or DEXs, in opposite to standard centralized crypto exchanges, allow for exchanging crypto assets in a completely decentralized and permissionless way without giving up the custody of the coins. There are two main types of DEXs, the liquidity pool based and the order book based. So yeah, order books and liquidity pools. Liquidity pools are folks adding liquidity and basically getting a return, and pairing two things like Uniswap, so something like Uni and Ethereum, or Kyber and Ethereum, or Balancer and Ethereum. So you have liquidity pools that basically run DeFi. So if you go into Uniswap, for example, you can in fact look into its liquidity pools and see how much has been locked. You can see how much has been traded. There's a whole transparent way of looking at these pools. Like if you look into liquidity pools, like you'll see which ones have the most total value locked, TVL, and how much volume has been traded in them. So that's the transparency that DeFi gives you in liquidity pools. So we'll continue. So derivative is something that we are mostly used to as traders. Like we use things like IC markets, we use things like Bloomberg, we use these sort of like trading platforms to basically take positions. So we're derivative trading, and this is also a big sequence in DeFi. It's automated. So similarly to traditional finance, derivatives are contracts that derive their value from the performance of an underlying asset. The main DeFi application in this space is Synthetics, which is a decentralized platform that provides an on-chain exposure to different assets, such as market trading. So synthetic models are a big use case in DeFi. Other things that I'm like really in tune with is something like Chainlink, right? So Chainlink is an Oracle token. It creates layers and creates interoperability between mainnets. So if you see something like Chainlink, you'll see how big of a project it is. These are the kind of projects that will do really well. Like they have the most total value locked, and they work around many different partnerships, and they create layers. An Oracle is something that sort of adds value. You know, if you look into the Chainlink ecosystem, you would see many different providers and a lot of sort of movement happen here. So they're like data providers. They're like the oracles to Twitter and Facebook, and sort of social media and other sorts of many different use cases. So we'll continue kind of defining it. So another real important, although not strictly limited to finance, part of DeFi ecosystems are Oracle services. that focus on delivering reliable data feeds from the outside world into the smart contract. The most popular project in this space is Chainlink. They're pretty much all the main parts of DeFi ecosystem. They can also be combined together in multiple various ways. We can think about them as money Legos. Yeah, that's a really cool way of looking at DeFi. Like you can basically take a DEX, and the DEX can also be a launch pad, and the DEX can also be a NFT marketplace. Like you can connect the sort of the scripts together and build real good cool use cases. You can create an all-in-one sort of place. As more complicated DeFi project can be built on top of the existing blocks. So in summary, as you probably already noticed, DeFi is super interesting and a vibrant space that is full of opportunity. Although we have to remember that it is still very nascent in this industry, as in it's very, very early. We're only 5 years into this, 5 to 6 years. So it's a high risk and a high reward game. So in its current days, it's going to go through a lot of like sort of discount factors. A lot of these tokens, a lot of these projects will have 50 to 60% sort of layoffs and then sort of rebounds into 300x's, 200x's. You will see all those things happen because it's a new technology and it's just being introduced to the world. Although DeFi is currently built predominantly on Ethereum with more adoption of interoperability protocols, we may see more projects built on different chains in the future. So yeah, we have mainnets like Polkadot that are trying to achieve that, right? They're trying to connect the many different sort of interoperability darts. So like if you see a lot of like Polkadot projects, right? They're based both on Binance Smart Chain, they're based on Ethereum, they're based on Solana. So Polkadot projects, right? Polka projects. You can go to his website. In fact, I'm gonna give you guys this link. I want you guys